Happy last day of the month. I think it speaks for itself that everybody is super happy for March to be over with. So on to April.
Oh yeah, for sure. On to April, or maybe I don't know. It's funny. April 22nd is where Tesla bottomed the last time, at 130.80 low. But I'm still hoping that this is going to be the bottom now,
Yeah, it's
or that
just
we had it at the 215.01.
yeah. I mean pre-market that was 215. During regular session it was like 217. Yeah, for Tesla.
Yeah, I watch all the pre-market stuff because like every little, you know, every line in the sand, they'll either cross it or they won't. So I have to look at every one, the lowest of the lows.
Yeah.
So yeah, this is the tracker reporting to you from the bottom of a well. I couldn't put my headphones on today. My head hurts too much.
Ugh.
Um,
All right.
I was saying it's like the Monday that I didn't want to see because we've retraced back to where, like basically from Monday the 13th, I'm sorry, March 13th, it bottomed, ran up, and now we've hit a slightly lower low than March 13th. So we'll get into that. Let's let Matt do the indices,
Yeah,
and I'll
well,
show you a chart on the SPY later.
yeah, I'll just jump into the SPY. And if you guys remember a while ago, I kept talking about that 585. So I'm bringing back the log scale fibs this week. And the 585 was lost and basically never even got attempted to go up there and even like back test it as resistance. But the next extension level below still is never been touched, right? And even pre-market, it has never been touched. So we can consider that the destination probably. Right there, it fell short on March 13th. And right here, it's fallen short again of this 548.25. So I think we will probably see maybe a wick through there to see if that can actually hold as support. But log scale fibs are actually um, usually better support and resistance indicators because it's a little bit more exponential. And with that said, you can see that it after getting rejected here, it just gravitated down to this log scale fib. So that's going to be my main focus for SPY today, trying to see if 548.25 can hold as a support. And everybody's screaming bear market out there. I just want to put things in perspective from the market top, even to pre-market action. SPY is only down 10%. So by bear market standards, I believe it has to be 20%, right? Which a 20% correction would be way down here, down in the 480s. So pretty much a ways to go before any kind of official bear market in technical bear market terms. So just wanted to put that in perspective that it's just down 10% from the highs. That's actually pretty normal. Some of the other stuff that's getting beaten up a lot is the high beta stuff, but the high beta stuff now is a lot more high beta and volatile than it was previously ever before, probably because of the algos, the machines, AI, all of that stuff. So just they can whipsaw things and make people go crazy. And with that, we'll go to QQQ, and I do have the log-based fib on this as well, and time to focus on this 465. Yes, it is below it pre-market. It's right here, and actually it is a lower low from the March 10th low, right? March 13th low. It is a lower low from there, so we'll see if that can actually get reclaimed or not. But that is showing more weakness than the SPY, so that's a little bit potentially to go down a little bit further, maybe even to the linear based fib down here, down to the 450.72, which actually was an interesting zone back after the August 5th crash. It came back up and retested it there, so the potential to go back down there is there, especially since it's gapping down pre-market, making a lower low. With that, we can see that the IWM is right there at 197. And on the weekly chart, what is at 197? Well, it is the 200-week moving average in that zone, which is 199. So it is going to gap down below it a little bit. But let's take a look at the March, what is it, the March 13th low? Still above it, right?
Yep.
So it's technically not a lower low, so that is not as bad as the QQQ. So SPY and IWM are still not making lower lows from their March 13th low, while the QQQ is. But I think the QQQ I've been talking about weakness in that for a long time, and I've been talking about how Nvidia keeps running up to resistance for a long time. So the QQQ is not really that surprising that it's down a little bit more pre-market than the March 13th lows, but everything else is kind of just a little bit normal, right? So I'll be watching that low today, and that low is 197, and it is 197.90. So it's an interesting development there, but it is gapping down below the 200-week moving average, so that's something we got to pay attention to. And today is the monthly candle close for IWM, so I am looking at that 50-month moving average as well at 201. So if there is a reversal today, I mean, that would be the day to do it. So we'll see. All right, tracker.
All right, I want to share with you my SPY chart, and this is sort of how I'm looking at it from an Elliottician standpoint. If we go back all the way here to the March 2020 pandemic bottom, I kind of look at this as the end of one era and the beginning of a new era. And so I start off my next 5 waves with the pandemic low here. So from March to January of 2022 is the wave 1 top. Then the wave 2 bottom is that October of 2022. And then after that, my projection would for a, let's see, I sort of saw it do like a 764618. So I was projecting based on a 764 wave 1 top. Here, let me just hide this for a second. This being 1, 2, so 1382 would be like the wave 3 top. And so, well, all we've done so far from the pandemic bottom to wave 1 is by definition 100%. From the wave 2 bottom, we've come to exactly 100%. That's too short for all of wave 3, in my opinion. So I'm looking for a 1382 top, like the wave 3 would stop at 7,000, or it's SPX 7,009, 790. So I think this is still a wave 3 here in the middle. This is 3. You know what? This should be right here. This is like a. Oh, if I do that. Sorry, I'm changing things on the fly here. 382, 1236. Okay, so now I'm looking at 671 for maybe a SPY top. Ooh, which brings us back down to here. Ooh, which makes it look like where we're kind of right now. Anyway, forgot I deleted this thing. I was just going to bring it back. From the wave 2 bottom, a minor degree wave 1 in parentheses, 1, 2, 3, 4. I think this is the 4th wave, and the 5th wave has yet to fill out from between 2 and 3. For all of the 3rd wave, I think this is the 4th of the of this 3rd wave. This should be down here. So, the job, if you've heard me talk about this before, the main job of the 4th wave is to make you believe that the 3rd wave was the 5th wave, and now it's going to do an ABC correction. And so, I guess the proof will be in the pudding here in a minute. But I think this is just the 4th wave, and we've already gotten a slightly lower low than here. It's just a slightly extended wave 4. I'm still looking for, well, I just moved it down to here, didn't I? 671.53 for the wave 3 top, based on this being a 382, 1236. So, yeah, I think this isn't going to, we'll know I'm wrong if price crosses underneath this weekly moving average 75, which now is down at 538. If it touches it and runs up, that's great. If it doesn't touch it and runs up, that's even better. If it crosses below it, that's when things will, I'll have to seriously consider that this was like a wave 5 top. But the evidence that I'm seeing says that we're just, finish out a wave 4, and it should run up to SPY 671 next. And then after that, it will look dire again because it would actually come back to the 764 at 548. This is almost where we're at now. And then it goes up to 2236. But that's in the future, and we're not even thinking about that today. But long term, yeah, the SPY just keeps going up into the rate, so don't worry. This thing isn't going to crash all the way back to like the 1930s or anything like that. All right, that's what I wanted to show you. Sorry, I was kind of long-winded, and I kind of hastily built the chart just before the show here. So.
No problem. Yeah, I wanted to jump into Bitcoin real quick before we do. And I'll do gold too, just because I see that correlation, and somebody was asking about it. So my Bitcoin chart, it closed the week below the 83,558 and again below the baseline again. So is this something that's just going to keep collapsing and go back down to the 72,000 or the 60,000 zone, 69,000 zone? I still look at the monthly chart, and today is the monthly candle close for crypto, and Bitcoin is still nicely above that monthly conversion line, and that's at 79,467. So yeah, I mean, this does have potential to continue to stabilize on top of that 79,467. And so I'm still not that concerned with Bitcoin. I just saw it getting rejected up here numerous times. And I was on the morning show telling you guys when it was at 87,500, 87,600 consistently. I'm like, this is resistance. This is resistance because it's the angle that was resistance in the past. And sure enough, it kept on getting rejected and came back down. So that's kind of the range, right? 87.5, 87.6, all the way down to maybe 79.5, 79.4. Could wick below again to the 78. But I kind of think that 76,600, I put a post out there yesterday saying that's kind of like a bottom. So I think that will kind of hold, right? I think it really has a high potential of holding, and we'll see in the weeks or the months to come if that does want to hold. But I still think that really has a good potential to hold, simply because when we go to the weekly chart here, it's just kind of buying time to get closer to the cloud. And even if it did drift a little bit lower in April to go back down and maybe test this low, I think by that time, getting into May or something, it could be touching the cloud before going higher. So I don't think it's ready to just go collapse down here. There is a lot of demand in this zone, and we know there's a lot of demand because of these wicks down here, right? These wicks right here, they're indicating that there is a lot of buyers stepping in when it does get a little bit lower. So I'm not that worried about it. I think how the altcoins are really performing too, they're still not really going lower. Some are going lower, but the majority are not going lower than they were earlier this month, back on March 11th. So that's my thought on Bitcoin. And when it comes to gold here, let's just do gold on. I'll do Tesla in a bit, but let me just jump on gold here. But the monthly chart is kind of telling a story here for gold, and the story is it's finally at this arc right here, and it's going above it. And we know price loves to wick above and wick below levels. We saw it do it many times back at this green level. It wicked above, closed below, wicked above, closed below, wicked above, closed below. And now it's at that point where there could be a reversal here, right? There could be some kind of reversal there. And we are at a point where if I just pull up the fib, let's pull up a fib right here from the previous high to the low. And we see that it broke above the 1.618. And if we use the linear scale fib right here, let me just take this off so we can see it more clearly. It's breaking above this 2.272, the 3033, which could also just be some kind of fake out or a liquidity grab before trying to consolidate a little bit more. Like we've seen many times in the past where prices do close above fib levels just to retrace, right? But even with that said, the next fib level is at 33.35 up here for gold. So could it melt up all the way up there and then get rejected hard and come back down? Yeah, it could. Sometimes when melt ups continue, they can last longer than expected. Just like corrections, they can last longer than expected, but they kind of reverse hard at that point. So judging by all of this confluence, I think what I'm seeing is gold. Yeah, it can keep going up a little bit, but I think what we're looking at is possibly just running out of steam pretty soon. Maybe not a complete rejection just yet, but I think it's going to be running out of steam pretty soon for gold.
Yeah, I agree. I've got an Elliott wave chart for GLD. Thanks. So basically, same thing from the pandemic low here, March 2020. You have a wave one, wave two, and now we're in wave three for gold. And it has in itself has five subwaves up. So here's the one, two, three, four, five, and I pulled the fibs on it all the way on the right here, and I just put these exactly where my theoretical fibs would go, and you can see it did a little bit more than the 618. It didn't go all the way down to the 236, but it got close enough. It went up. It went a little more than the 123.6, and it didn't quite get to the 100%, but it got really close. And now it is wicked above what my target would be, the 2236 at 281 for gold, or I'm sorry, for GLD. And it's like halfway between the 2236 and the 238.2% at 289.51. So, it like Matt just said, it could continue to wick up a little more. Um, I wouldn't expect it to wick up any for much longer than this week if it's going to reverse. So yeah, watch 289, watch 296, watch 303 if it really melts up. But I'd err on the side of caution. This is almost done. So it looks like it would be on track for, if it did a really fast correction, it could do a 50% retrace at 226.47 is about where the weekly moving average 75 is. If it did a deeper retrace, then look for it to go to 212.74 for the 618 retrace, but about 382, 236, 618 back to this wave two bottom is what I'm looking for. So that's 240, 257, 212.74. If this is the top right here, which I think it is. Very close to.
All right. Yeah, with that
Oh,
said,
all the
let's
miners are coming. Oh, the physical miners are coming. Yeah, go ahead.
NEM. Yeah, I was gonna just jump into Tesla before NEM. Just
Yeah, that's a
Tesla.
good idea.
I did a weekly update yesterday for Tesla and Palantir. It's pinned to my X profile if you guys haven't seen it. But I basically said before the futures open that it's probably going to go back down to the 250 zone, 248, for the fact that we can go to the weekly chart here and just look at this wick, right? And this wick, it did close below some important levels like that 272. There was a fib level right here from the previous high to the low, right? The 702 right here, the 272.79. It closed below that, and it also closed below the 50-week moving average. So I told people on my X that it's probably going to go retest the 200-week moving average, the arc right here, maybe even wick below down to this 618 again and retest that 242 zone. So I think this is not out of the ordinary. This is kind of expected. And the one thing I wanted to point out is it's closing that gap. I did mention that too on the update, that it has the potential to close this gap because everybody focuses on gaps. And there we are. Pre-market is closing it. It's fine. So I think what we do have is just more consolidation, right? Just it went up massively, got rejected up here. So this is a normal process to come back down and retest this zone. And it could even go back and retest this angle down here, which is kind of in the low 240s or high 230s down there again. But I still like market symmetry the most compared to all the fibs, all the moving averages, everything else with Tesla. And it's right back into that important zone again. So 250 down to the high 230s. I think that is still possible, but it's nowhere near touching its lows now from March 10th, March 13th. Right, it's nowhere near down there because it's a very, very good higher low so far. So we'll see if this zone can hold. Tracker.
Yeah, I've got basically just the same chart to show you, but all I wanted to say is just that look at these extreme moves, especially the one from that 130.80 low to the 488 high. So we're just getting aftershocks, right? It could easily, I mean, basically what we just had last from March 13th to now is a small fractal of this, right? It ran way high and came all to where it began. In fact, in our case with this fractal, it did come back to, actually in Tesla it hasn't quite yet, but it's almost come back to where it began from here, March, It's March 10th. This was March 10th. Anyway, oh, it was March 13th in the SPY, March 10th on Tesla. So it hasn't come all the way back to there, but it did close that weekend from last May. So on this Monday, now we're back a little bit below that. Um, yeah, just watch this cloud. Maybe it's just under this 61.8% retrace from the last high we had, 291.81, back to the last low we had here at 222.28. So yeah, 618 or 70.2% are important fibs I'd watch. So it already wicked below 248.86. Let's see if we can get back over it, close the gap, and keep going up. If not, if it wants to test lower, watch for, like Matt said, his 242. It's 243 is the fib here on Tesla. But again, I don't believe that this is. I don't believe that this was a top back here at 488. I think it's on the way there. So I guess that's all I have to say about Tesla for now. But yeah, look out for over weekends. Expect them to fill. Like I was saying, my friend Amro Hassan said that just they tend to fill more often than the ones that happen not on the weekend, and that's what we got.
All right, and you were going to do NEM as well, I think.
I'm not sure if I mean, let's see. Why don't you do something else? Because I have to build this one from. I used to do NEM back in the day, but that's like an old chart. So if you want to do something else, I'll build this chart here.
Yeah, I don't really have one of those. Yeah, I'll do a GME. I see somebody bought GME this morning. So GME, there's really no change for me. Let me switch my screen. So here we are. Like last week, yeah, just a normal price reaction in my opinion. Just went high on earnings up here, went up to the top of the Ichimoku cloud, or sorry, the bottom of the Ichimoku cloud, and that was around $30, and that was expected. And then boom, rejection. And now we are sitting at a price where it could come back down to the 100-week moving average. So we're basically back in the normal range that it has been for the past. We can even go back in time here since it broke below the 200. Basically since the beginning of the year, right? It's just been underneath the 200 and above the 100, and that's kind of been the zone for the whole time, and it's still in that zone. So whoever is just worried about it tanking, really, it's not, right? It's not really doing anything terrible. And in fact, if you go back to the March 10th low, it's just a little bit below that, but the destination could be just it wants to retest this 100-week moving average right down there. So GME, am I worried about it? No. Have I started buying it finally? Yes, I have started actually accumulating because on Friday, right after I saw this huge rejection, I'm like, yeah, I'll start buying, and I will continue to be a buyer down into the low 20s and maybe even the high teens here if it does want to go a little bit lower. This does look like a great setup for the future, especially if you've been following Cantonese Cat. He was talking about the Bollinger Bands a lot, right? And he was saying that basically breakout of the 20-month moving average and a back test, and going back down there is also in the low 20s here. So lots of confluences showing that this is no longer a bear market chart. This was the bear market here. Now it's a breakout, and it's trying to bull flag on top of the 20-month moving average in the Bollinger Band. So, and it was also a normal rejection too, getting rejected back in December and January off the top of the monthly Bollinger Band. So this is completely normal price action, I think, for any stock, let alone GME.
Let's see. I'm prepared to talk about Newmont Mining. Basically, I label this as a cyclical stock now. It doesn't have. It has so many. It doesn't really follow an Elliott wave growth pattern. It basically just hits a high and then just gets bombed back to a previous low. Most recent cycle, these are monthly candlesticks. So from like 2021 to now, it basically struck a high back on April 1st, 2023. Yeah, 2023, 86.37, made a new higher low, about $29. And this was the 70% fib extension. No, I'm sorry, the 78.6 fib retracement down to here from that previous low, or from this high back to that previous low. And now it's kind of like Matt's thing where it's going to try to get to retest the 78.6% fib. And if it gets rejected, it'll probably get bombed back down to the 50%. I don't know. This one's just tricky. I would just take these fibs here. You can take a screenshot of or whatever, and you're just going to have to watch each fib as resistance if it's above it and support if it's below it. That's all I can say. It's not likely to go higher than 86.44. I think it's just sort of a fear and greed cyclical stock. Miners, I don't like to trade these because they break your heart. You spend 95% of your time waiting for it to hit that target that you want. It goes there for like 4 hours, one day, and then it goes right back to where you were waiting before. So you spend a lot of time waiting for miners, and they just don't always, for that one opportunity that happens like once every couple of years. Anyway, that's my NEM analysis.
Okay, I have PayPal on deck here.
Okay.
Yeah, so PayPal, it cut through a lot of things, right? If you look at the Ichimoku, it just went right through it and kind of closed below it on Friday. And I was looking for that to hold. I was also looking for the 100-week moving average to hold, and it did not hold as well. So when these levels, these Ichimoku and moving averages, Fibonacci, whatever, they don't hold, then I just go back and rely on the market symmetry of it all. And then we can just see that the symmetry of this is actually pretty perfect. It was a huge breakout, got rejected at the blue level, all the way back down to the orange and went to the blue angle down here. And now we're really just at that orange level again, trying to battle that. And we're going to open a little bit lower right there on the arc right here, which is around 64. Yeah, it's around current price pre-market. But we're in an interesting demand zone. And really, this zone is very intriguing simply because it was originally the breakout zone back in 2017, right? We can see it broke out. And it never really backtested it ever until 2023. So it took that long to just backtest it and then get that liquidity underneath it. So I still think this is all part of the bottoming process. Sure, it went up to this arc, it got rejected completely, and it came back down to this support down here. So this is looking like it's near a bottom of a range. It's looking like, could it come back down to this angle below? Yeah, it could, but that still would be a higher low, right? For the $59, it still would be a higher low from here. So it is an uptrend from the October 23rd. So this is not anything too scary when you look at the symmetry of it all, but it was a massive rejection there. And it got rejected right where it should at the arc to come right back down to this major support zone. So I think the lower it goes, the risk reward gets better. And I think it does have the potential to go to $59. But I do think in time, this will be a very nice looking chart because even if it does go down, I think it can consolidate here and just get out of there, right? I think that'll be the future for PayPal. But maybe you can just be a little bit more patient with this one if it does want to go down, but I think it's in the right zone finally after getting rejected by this zone up top. All right.
I'm out of requests.
You're out of requests? Oh, there's SLV. I can do SLV. Let's see.
Okay.
You don't touch silver?
I don't now. Again, it's like I stay away from the physical miners because they would break my heart. And SLV was especially bad because was it Morgan Stanley? They literally were caught red-handed monopolizing, and they're fixing the prices on silver.
Well, that always happens, right? They fix the prices on everything.
But like they got caught.
We are just. Fair enough. All right, well, let's go to SLV. So I see the 702 right here is the what number is that? It's that pre-market symbol was in the way. Yeah, let me just get rid of that. Where do I go? Settings. Yeah, whatever. I'll just keep it there. But yeah, anyways, it's around like 3106. So you can see that it got rejected massively last time in October 2024. Then it's coming up right now, and it's basically right around their pre-market still. So this is basically at a pretty important resistance zone, but it did break back above this arc here, so that's a good thing. So can it break above and go to the 786? I think it is. It is possible, right? But it might need to come back down a little bit before to go higher. With that, we can also put on the Ichimoku here just to see the conversion on the baseline. They're at 29, 23, and 29 respectively. So if it did get rejected here, it might come back down towards the cloud in the 29s or 28s down here, and then try to push on through. So it is a bullish chart. It looks like it can break through that 3107 zone, but I think we got to give it a little bit more time, a little bit more patience to see if it really wants to confirm that it wants to break above right now. And it still hasn't even gone above this previous high of 3180 yet. That was set back in October 2024. So I think what we're looking at is just more resistance right now before trying to break through. But I do think it'll probably gravitate eventually towards this 786. That's what I think.
I could let me show one more thing on the SPY chart.
Yeah, go ahead.
Which is just like, well, what if this was like this was a wave 5 top, and we were getting an ABC correction, then I'm just looking from the 613.23 high to this 409.21 low down here. So a 236 level, we're past it. The 382 is right here at 535.29. So for maximum terror, the SPY should go to 535.29, maybe wick a little bit below it. But then even then, I would expect it to maybe wick below 535, go back to 5. It would not be able to get over 565.08 much, maybe wick above that. And then, bullishly, it stops at 511.22 or more. Bearishly, goes all the way to the 618 or the 70.2% or even the 70.6. So, I guess this is if you're trying to manage your fear, look for 535.29 in the SPY, and hopefully we never see it. But if it does touch it, then look for it to attempt to get back to 565. So maybe that will give you a trading opportunity to come up. And then you can breathe a sigh of relief if it tests back to 565 as support and then keeps on moving. Gets above it, tests back to support, and keeps moving higher. So watch these retracement fibs here for the SPY overall. And that's all I got to say there.
All right. There's a ONDS. Do you have that chart?
I don't think so. Let me take a look. No, I've never done this one. I could do a quick retracement on it though, and just say last low of 57 cents back to 349, 347. It tried to get above 23.6, got rejected. It's going to try for $1.25 again next, and if it can get above $1.25, then the next level will be $1.68. Test back to $1.25, and then up to $2.36. And just extends out a little bit so they're not crowded in there, and you can take a screenshot. Is it too much? No, that's perfect. There you go. So it should get above $1.25 to $1.68, back to $1.25, and then to $2.36. And you can see the market makers are buying it down here on the 8-hour chart.
Yeah, I can see something like that. Yeah, the 125 is going to be difficult for ONDS to get back above.
Yeah, it wicked above it before, but yeah, it's going to have to. That's the test, the litmus test. Can it get over $1.25 or not?
All right, I got a Amazon chart. Yeah, let me just do Amazon real quick. So Amazon, actually, I was telling my Patreon people this a lot, that it's probably going back to, once it broke below the 200-week moving average down here, I was saying it's probably going to go back to the previous high set back in July 2021. And that's exactly where it's going right now, pre-market. That's 188 right down there, 188.65. And that's breaking below the 50-week moving average. So this has potential to stabilize on top of here. Massive previous resistance zone, right? Breakout back test of it for the first time, really, right? So this is finally at a destination that I find appropriate and could hold. So I'm going to be watching that 188.65 throughout the week just to see if it can stabilize around there. And if so, then that'll be great. But can it go a little bit lower? Of course, you can see all these wicks below the 188. So I think it can go down to like the mid 180s, maybe even the lower 180s too. But I think this zone is pretty nice for some final consolidation in that zone. So that's what I think about Amazon.
Not a lot to say about Kali Biotherapeutics other than it got bombed back down to a new lower low. So all I have for you is the potential retracement chart, which looks like very similar to what I had before, just a few pennies different. But that's, that's just if the low just hit at 51 cents, stays below. Well, here are the numbers on the side. So 435, which seems a million miles away right now, but that would be the major resistance point. That I'll have to try to get over. I guess I could do a smaller degree retracement down here, but I don't know. As far as I'm going, I'm not trading it out of Kalidi. I'm just kind of holding and waiting. But it is. Let's do the reduction. $0.51 is now the bottom. So look for like it'll have trouble getting back over $1.31, but it should get to. If it does, it should go to $1.80, back to $1.31, and then $2.60. Kind of like this. 32236 There you go. That would be the retrace that I'd be looking for on the smaller scale, and this one on the bigger scale.
All right.
Wolf in MicroStrategy.
Yeah, I got time for one more, so go ahead. Choose one tracker.
Let's do Wolf because it did not make a new lower low. It had 5 waves up. This is a weekly chart. 5 waves up to $9.30, and it made a slightly lower low, but in comparison to the whole chart here, it's not really that much lower. Let's go to 8 hour and just grab this bottom here. So now, I do this straight right there. All right, so now I'm looking for 574. You want to go back to the weekly chart. $5.74, 451. It might even go to no. Let's do 382.236, 1236. So here, if you have to know where the fifth wave is supposed to fall, it would fall about $21, but closer in. These are the fibs that you want to look at on the right here. 451 is resistance initially up to 574, and then test back to 451. If this is indeed the bottom, you can see a buy order block. This green block is just buy orders all the way low. This previous low down here, 6. So we'll see. I think Bitcoin's ready to turn the page. We'll see. All right, I'm done.
All right. I think that's it for me today. I guess we'll be back tomorrow, and we'll see maybe the Triumvirate show tomorrow too, perhaps. I'm not sure.
Yeah.
We'll find out.
We'll see we'll see if it has a question mark or an exclamation point over that Triumvirate show tomorrow night.
Yeah, we'll we'll see if cat's available. We'll see. But yeah, I mean, we're watching those levels. I mean, SPY 548, just watching that a lot just to see if it can hold. So we'll see. I mean, again, it's only down 10% since the high set about a month and a half ago. So
Yep.
I'm not super worried just yet. Just a normal retrace by SPY standards. We've seen a 10% correction numerous times before. So I don't think it's really time to panic just yet. So with that said, guys, I'll see you tomorrow.
All right, thanks, Tracker. Matt, I'm Tracker. Thanks, Matt. I'll see you tomorrow morning.
All right, see you tomorrow morning.
All
Bye-bye.
right, good luck, everybody.